Does an invoice need a signature? Have you ever wondered if an invoice really needs a signature? This question is more common than you might think, especially for those managing their own businesses or handling accounts receivable. Let's break it down together. From a tax and accounting perspective, an invoice does not legally requiring a signature to be valid. Invoices are primarily documentation of a transaction. They detail the goods or services provided, payment terms, and amounts due. So, if there is no signature, it does not invalidate the invoice for accounting or tax reporting purposes. However, there are practical reasons to include a signature on an invoice. First, a signature can confirm that the customer has received and approved the invoice. This can help prevent disputes over payment or delivery later on. Second, if the invoice involves additional agreements or terms, a signature can show that the customer agrees to those terms. This can be particularly important for larger transactions or ongoing services. Additionally, signed invoices can enhance the professionalism of a business. They provide a clearer audit trail for accounting and tax compliance. A signature can also help prevent fraud. Signed invoices are less likely to be altered without authorization, which reduces the risk of financial loss. In many situations, both the seller and the buyer may sign the invoice to formalize the transaction. However, remember that the enforceability of the contract relies more on the delivery and acceptance of goods or services than on having a signature. From a bookkeeping standpoint, keeping accurate and detailed invoices is essential for managing accounts receivable and supporting tax filings. Key elements of an invoice include seller and buyer information, invoice date and number, payment terms, descriptions of goods or services, quantities, unit prices, and applicable taxes. The presence or absence of a signature does not affect these important functions. With technology on the rise, electronic or digital signatures are becoming more common. They can simplify the signing process while still maintaining security and compliance. For example, the Internal Revenue Service accepts various forms of electronic signatures on certain tax-related documents. This reflects a broader trend toward digital record-keeping in business. In summary, while an invoice does not need a signature to fulfill its tax and accounting functions, including one can provide extra verification, reduce disputes, and support better record management. Businesses should consider these benefits against the effort involved in obtaining signatures, especially when dealing with large volumes of invoices.